Hello guys, Brian here. Today is day 8 of letting AI advice to guide my portfolio decisions. Today is going to be a relatively short episode. There isn't really much back to report in terms of strategy changes, but there's something interesting in terms of the returns though, and I'll be analyzing it one by one. First off, let's start off by Claude, which as of right now have accumulated around 45 to 44 or to $45 in total return. Basically, the stock risen again, and it's currently leading all the other AI advices. The portfolio's got about other AI advices. As for Gemini, it sort of rebounded back. Yesterday it was around on the like 1003 range, 1004 range. Right now, it gained around $31, so it's like a really strong rebound based on the stock choices, which is very good, in a very good position for Gemini. Even Gemini said that they're expecting to hit the around $50 profit mark by midweek for next week. So we're really in a good position for Gemini as well in terms of the rebound. It recovered perfectly, so yeah, there's nothing to really worry about. As for GPT though, there is something that is still a bit concerning. We did gain around like $1 in terms of profit compared to yesterday's or so, but currently it's still in the negative region compared to where we started with our initial $1,000 principal. So yeah, that's mainly for the returns. And now let's analyze the general trends provided by these chatbots. For Claude, it gives out some key informations about the general sentiments of the market. First of all, the tariffs, the Supreme Court tariff rulings are delayed until February 20, so there might not be like severe market changes as of the short run. So yeah, and then the defense stocks, essentially like my XAR stock, might continue to rally, according to Claude. The second one is that notice that the semiconductor super cycle has just begun after the release of TSMC's quarter earnings and also Morgan Stanley's predictions of Nvidia delivering one of the highest returns. It's currently predicting that most of my holdings on the semiconductor industry or any relevant high-tech stocks might be growing, so that's a good sign. It also gave me a very detailed analysis in terms of the expectations of my portfolio going to the Friday pre-market trading day, including giving me a base case of an 80% probability of gaining around 6 to 7% in terms of the portfolio this week. There's a bull case which is around 15%, that there's a strong chip sector that continues to rally until we end up with around 9% in total gain. And the bear case, which is the lowest probability of around 5%, will be the profit-taking part after the Thursday rally, which is usually very happen when everyone's just starting to take their profits and to like exit the market. So it's also probable, and then we'll be hitting around the 4 to 5% mark in terms of returns from our start. For Gemini, I noticed how its advices and strategies tend to differ with Claude, where Claude pretty much likes to analyze the case by the general sentiment or the macroeconomic events. Gemini seems more like the one that likes to deliver company and firm specific analysis. So let's take a look at today, and basically what it attributes to today's success of rebounding was because of a massive AI infrastructure breakthrough, which allowed us to rebound a 6.63% surge today. And let's take a look at why Gemini is making a case to hold all of these existing positions, just like Claude. First of all, on our Vistra core, the 20-year meta deal gave a lot of cash flow in, so that's like the repeating theme. So that's not really like a really relevant discussion, and actually grew a lot by today, by the way. Intel is peaking its 52 weeks high with a successful CES launch of its Panther Lake chips built on 18A process. So it's being probably sold out towards in terms of its chips, so it's probably like rallying as of right now. Nvidia is rebounding on TSMC's blowout earnings and their plans to increase their 2026 capital spending to meet the chip demand. That's why Nvidia is currently growing. As for Amazon, it's basically the only red position I have as of right now, and Gemini rationalized it by saying that it has currently faced a lot of pressures in terms of potential January layoffs and legal battles over a failed investment in Saks Global. So that's generally the cost, but analysts have also maintained a $300 price target ahead, according to Claude, since they believe that OpenAI's spending spree will significantly boost Amazon's AWS revenue growth in the end. As for GPT, there isn't really much to say about it. The market signal and analysts are pretty much vague. I'm not sure if it factors into the reason of why it's like performing relatively poor in terms of investing decisions, but the only market signals it filtered out was mild drift lower, no capitulation, and no reversal strength, and basically tells me to keep on hold all my Apple stocks and to buy only on confirmed strength. So basically, I'll be holding around $400 to $500 in liquid asset. Liquid cash into next week. So I guess that's mainly the plan. And yeah, if you would like to follow my journey, keep on subscribing, like, and share to other people who might need it. Also, just an announcement, I'll be releasing my interview with a FANG tier technical account manager on Saturday, so be sure to tune in to listen to how you should sort of research your career, or how do you enter the job market that's a bit saturated in the tech industry.